is Rachel Goldman. I'm the CEO of Paramount Gold Nevada. Paramount Gold is a microcap currently listed on the NYSE American Stock Exchange under the symbol PZG. We're US domiciled and all of our ounces are currently based in the US. We don't see that changing anytime soon. We have in excess of 4 million ounces of total gold resources based between our two projects in Oregon and in Nevada. We have a June 30th year end, so this is fresh information on our financial position. I do like to point out that our balance sheet is in decent shape considering our subsequent to the year end ATM sales and our prepaid expenses. We have a strong shareholder roster with some strategic holders, including insiders, Ausenco and Seabridge Gold, in total owning just under 30% of the company. So Grassy Mountain is our primary project. This has been our flagship project since its initial acquisition in 2016. And this will be the first mine ever permitted in the state of Oregon under the modern permitting regime in the state. I like to include these images here to give a sense of what we're looking at when we're permitting a mine in Oregon for the first time. So although people are more familiar with the highly populated west coast of the state, we are all the way on the east with the border of Idaho. And as you can see from these images, we have a topography and geography that looks very similar to neighboring Nevada or Idaho. And simply put, it's a very good place to put a mine. In addition to the geography that we have in hand, we also are in a part of the state where there's much higher levels of unemployment, of poverty, and who are very supportive of seeing a project of this magnitude get built, as we will be creating about 300 construction jobs and then 100 full-time jobs once in full production. So the mine that we'll be building at Grassy is a very small but very profitable and quick payback underground mine. So we're building off of the proven probable reserves here of 390,000 ounces at fairly high grade, 6.5 grams a ton. We do have a mineral inventory here, though, in excess of 1 million ounces, which starts to shed some light on where some potential for mine life extension could come from. We'll be producing on average about 50,000 ounces of gold equivalent annually. Initial capex will be sub 100 million for an initial mine life of 8 years, again, just with 390,000 ounces that we've currently outlined in the feasibility study that was completed in September 2020. What's very interesting for us, a company our size, is that we will be generating annual free cash flow after tax of about $35 million, which is about equivalent to our current market cap. So the study that we completed with Ausenco last year was run at a base case 1470 gold price. And at that price did generate a robust IRR of 26% and an NPV5 of 105 million. Certainly all of the metrics increase proportionately to a higher gold price, and the project really starts to sing as we get towards current and higher gold prices. From a planning standpoint, certainly we also take great comfort in the fact that our break-even gold price is $1,000 on this project. So that gives us a lot of wiggle room between now and when we need to make a construction decision. So as this will be the first mine permitted in Oregon, it's important to point out a few things about the state. First is that the permitting laws that we're working with have been in place since the early 90s. And the fact is, they have never turned down a mine. It's just that there hasn't been a project that's been more advanced than Grassy, where the owners have been willing to advance it through this new process. So we are the first, which means that it is taking us a little bit longer, perhaps, than what we'd originally intended. However, we're quite confident at this juncture of where we're going to be going moving forward. So essentially, we've had one round of an initial consolidated permit application, which was submitted in November of 2019. That gave us a lot of information in terms of feedback to work with. And now we will be submitting our next application in very short order. That should put us in a position that hopefully by the end of this year or early next, we will get the stamp of approval that our application is complete, which then starts the clock on a 225-day review period, after which we'll receive draft permits. And 140 days after that, we would receive final permits. So some point next year around this time, hopefully we'll be able to come back and tell you that we do have these draft permits in hand. So from the time that we acquired Grassy Mountain in 2016 for $15 per ounce of gold, we have advanced it through various de-risking efforts, which will culminate, as I said, in the permits that we hope to have in hand next year as we move towards construction financing and then into production. In addition to the near mine exploration opportunities that we have at Grassy, and in addition to being able to perhaps explore some of the broader mineral inventory that we have that sits currently outside of the current mine plan, we do have a project 12 miles from Grassy called Frost, which we've optioned, and we received drill permits to drill this earlier this spring. We only started to get to it later this summer. That drill program is currently underway, and what excites us about this project is that being only 12 miles from Grassy, it could certainly be trucking distance if we find anything material here, and there was certainly some very exciting indications to follow up on from what was drilled by Western Mining back in the early 90s, where they had hit intercepts of up to 25 grams per ton. So our first batch of drill holes are at the assay labs now, and we should be able to start rolling out those results in the coming month to 2 months. Now, outside of Oregon, I mentioned we also have a significant asset in Nevada. This is the historic Sleeper property in northern Nevada. It had certainly been a storied producer in its day, producing from one very high-grade Sleeper vein of 7 grams per ton through an open pit heap leach, so it was quite profitable back in its day as well, even at a significantly lower gold price than today. So what we have here in Nevada is a significant land package. We have about 40,000 acres, largely contiguous, in a very prolific part of the state. So now for the first time in 6 years, we are doing some significant development work at Sleeper as well, which will start slowly and at our pace for a company of our size as we allocate capital between the two projects in Oregon and Nevada. But we will, for the first time, be putting in some drilling at Sleeper. We will be looking to build off of a historic PEA, which did outline a decent, though significantly lower grade project than what it had initially been. So what we're working to build off of is the 3 million ounces that we have identified here, but at quite low grade, 0.33. So the purpose of the development work that we're doing now is both to build off of the potential for higher grade material within the known resource, certainly looking for also the future Sleeper vein would be quite exciting. And we do have a significant portion of this deposit, which is sulfides. So we're doing some metallurgical work as well to see what we can do about processing those sulfides in a restart scenario. So from the PEA that was done in 2015, it had at the time outlined a decent 30,000 ton per day project. And this is only using the oxide and mixed portion of the deposit, 74% recoveries, about 100,000 ounce producer. And at the time, just under a $200 million CapEx for a 9-year mine life. And certainly using anything closer to today's commodity prices, remembering that study had been done at $1,250, it starts to look a lot more interesting at today's prices. But as I mentioned, this is a dated study, so this is one that we will be looking to revise, certainly with the newer information that we'll be getting from the current development plans, as well as using a more current gold price as well. So for all that, Paramount sits today with a market cap of just about 33 million. We have good institutional and insider ownership that has been growing in the company. We trade about 100 to 150,000 shares a day, but we're trading at only about $8 per ounce in the ground. And if you recall, I did mention that we bought our flagship property, Grassy Mountain, in 2016 for $15 an ounce. And we believe that our continued de-risking efforts will see that valuation gap close to something closer to our peers.